Good morning and welcome to Chart of the Day Cafe for Thursday, April 16th. And as always, we start our videos off with a look at the Russell Index. I'm swapping it up a little bit this morning. Normally we look at the 2-year weekly chart, but every once in a while I think it's a good idea to step back and take a larger perspective. So today I've got it on the 5-year monthly. The reason we look at the Russell is because it's leading the other indexes, and we always want to make sure that before we put any charts forward to our viewers, we're putting them forward in a rising market environment. And so in analyzing this 5-year monthly chart of the Russell, this looks like a pretty solid uptrend to me. The way it moved up steadily through 2013, it spent 2014 consolidating. We had this very bullish candle with volume in the latter part of 2014 that pushed price. It was the beginning of pushing price to the top of the channel range, channel defined by these two orange lines. And now we're up and over the channel, and this still looks pretty strong to me. So I'm going to pull it away from the 5-year monthly to the 2-year weekly. I'm pulling it in today and looking at these longer term charts just because we're at the beginning of earnings season. Futures are off a little bit this morning, so every once in a while, even just for me, I've got to remind myself, does this look bearish? No, it does not. So with this bullish posture still remaining in the market, and we use the Russell as our proxy just to keep these videos short and sweet. We don't want to get into too much detail. But the Russell is the leading index right now, so as long as the Russell remains strong, we will be putting charts forward. And the chart that I want to put forward to you guys today is an old stalwart. We all remember eBay. Oh my gosh, I love this chart. I've been watching eBay for a long time, and the reason I'm putting it forward to you today is because you're getting, I consider it a 2-for-1 stock right now. So before I get into all of that, I'm going to pull eBay in from a 5-year weekly chart to a monthly chart. And I want you to see how eBay, let's go even further. Let's go 10 years monthly. I love it when I see a chart that is consolidating like this. And it looks to me like in a continued strong market environment, what this says to me is that it wants to go higher. So if it spent 2 years consolidating in this area, to me it's ready to make a pretty serious move. So I've got to always remind everybody, at Chart of the Day Cafe, we are not making any recommendations to buy or sell anything whatsoever. We're just sharing chart insights with other interested chart people. But having looked at a ton of charts, I just love the look that this eBay chart is giving me. So I'm going to pull it away from the 10-year monthly, and I'm going to go to the 2-year weekly. And we're coming up on earnings. On the 2-year weekly, look at the way it's behaving. It has this low, equal low. I love it when we see this. It's a foundation for a move, when it just, it's like a stake in the ground saying, nope, I'm going higher. Earnings, nice. Came back in and went higher still. Keep in mind, again, these are weekly charts. We're coming up on earnings pretty soon. You might not want to get involved with eBay just because we're coming up on earnings so soon, but I just wanted to put this one on your radar as one to watch. I think it's really important. I am going to put an area of support, or support in around here. I like the way price is behaving around here, and now I'm going to pull it into a 9-month daily. And we can see how price is behaving in this area. We use this blue line as our 8-day EMA. And so with Chart of the Day Cafe, these are heads up videos. And I know everybody has their own trading plan for stops and all. I don't get into all of that. I just want to give you a heads up on charts and stocks that I think are worth keeping an eye on. So I'm going to put a little green circle here on eBay. Coming up on these earnings, one to watch, I think in the next year or two, if the market remains strong, eBay is going into a much higher price range. The reason being, it's in the mobile payments e-commerce space. eBay will be spinning PayPal off next year. PayPal is a leader in mobile payments. PayPal, as a component of eBay, the growth with PayPal has been phenomenal. PayPal has a strategic relationship with Uber and Airbnb. So the spin-off of PayPal next year, for me, this is like getting in on an IPO without being involved in the IPO. You get eBay, you get PayPal. The mobile payments industry is a $1.6 trillion industry and slated to grow significantly in the years ahead. eBay reported better than expected Q4 earnings last earnings season, and the chart would suggest to me that they're on track to improve upon those even further. So I want to be really careful because I'm not making any recommendations, but I got to tell you, I really like eBay and the look of the chart. Normally at Chart of the Day Cafe, I look for deep value. This one fulfills my value score requirements for Chart of the Day Cafe. So it's got a value score of, it's over 1. It's a scale of 0 to 2, and I want it over 1. So eBay has a value score that is 1.06, so it fulfills that requirement. But it's priced fairly right now. It's trading at 57.01 and it's worth 57.53, so it's at fair value. But I just think with the mobile payments component of eBay, it's one to really keep an eye on. It's got a forecasted earnings growth rate of 9%, a PE of 25.45, and it does not pay a dividend. I'm going to attach a couple of, you know me, I keep track of all of this articles on the companies I follow in Evernote. And so I've got these 2 articles that I want to send you with this video. eBay recently announced, in fact, this was very recently, it's teaming up with JD.com to introduce its products and services in China. That's a catalyst. And this one, 5 outstanding UBS quality growth stocks at reasonable prices. So with that, I am putting eBay forward as my Chart of the Day Cafe pick for Thursday, April 16th. Keep an eye. Thanks, guys.